So today, we're talking about something that stalks you more than your ex, your credit score.
It sure does stalk you. And unlike your ex, it affects your future.
Yeah. Are you buying a house? You need good credit. A new car? You need good credit. Even your freaking utilities, you need good credit.
And you know what? They don't teach you that in school.
They teach you the Pythagorean theorem, but they don't teach you about your credit, which
No.
is crazy.
And one missed payment will haunt you like that ex that never goes away. I'm Jen.
And I'm Amber.
And this is Snatched Up. So, Amber, have you ever missed a payment on something accidentally?
Yes. And I would say it had to have been when I was in college. I had a total wreck. Okay. And it ended up being completely total. I knew I was going to be getting a new car. The insurance payment was going to be completely paying it off. And so I missed that last payment before the insurance completely paid it off. And that was like the only thing that I had docked on my payment, on my credit score.
Were you still able to buy a new car?
I actually was, thankfully. But that was probably when I was like 21, 22, I guess. And so it really does affect you. Missing that one.
Oh, yeah.
I was thinking the insurance payment would come in. It would all be good. It would be fine. It wasn't fine because it took over 30 days for the insurance payment to hit, to pay the car off, and for me to get the payment to go buy a new car. And so I ended up having a payment that was late past 30 days. And apparently that really affects your credit score.
For 7 years, it affects your credit
For
score.
7 years. But after that, I really learned I'm not going to let that happen again. And so I made sure that I was going to have excellent payment history.
Ever since.
What was the first credit card that you ever had?
Dillard's. And nobody explained to me how it works and how you pay it back. So, yeah, you would think that I would have understood that, but nope.
What was the first thing you bought? Do you remember?
At Dillard's?
Yeah.
No.
Obviously clothes or shoes or
no
purse.
idea.
No?
I'll tell you.
Okay, so mine, I took out, I guess I was in college, and so I took out an American Eagle credit card because that was probably the only thing you could get approved for. So if you're trying to build new credit, usually store department cards, I would say, would probably be the most forgiving.
Yeah,
they're
the easiest to get.
Yeah,
they're the easiest to get.
So I started with American Eagle, so I probably put a couple of things on, like clothes or whatever, on my American Eagle card, and I did pay it.
Oh, good for you.
Yeah. I knew the payment came due.
Another thing that got me in college was student loans. For me, I paid for my college, and with that, I took out a student loan, and you get student loans that cover your expenses. The next thing you know, you've got student loan debt.
Yeah.
And that follows you forever and ever. I was luckily able to pay mine off quickly because it wasn't a lot, but a lot of people, when I'm looking at people's credit, that student loan debt follows them for life.
Yeah. And so what do you require, because since you're a mortgage lender, when it comes to student loan debt? Because I know a lot of people have it. So I have friends that are doctors, lawyers, and so a lot of their debt is student loan debt. So what is advice that you can give them? I've heard like they don't look at your student loan debt while you're actually still in school. Is that true or not?
No, it used to be true, but it's not true anymore, unfortunately. It used to that if it was deferred for 12 months, we didn't have to count it, but now you do have to count it. So what I tell people is you have two options. Either we have to count it at 0.5%. So whatever that loan balance is, we have to count it at 0.5%. And the other way is that you can get what's called an income-based repayment plan. And when you get an income-based repayment plan, then it calculates your income, not what the actual payment is. And then we take that and we can use that instead. And sometimes it's a $0 payment.
Okay. So you will use the payment plan that the Federal Student Loan Agency has set up.
Yeah. And if your actual payment plan is less than the 0.5% that we have to use, then we can use the lesser value.
So what if they're still in school and it's deferred?
Nope. Still got to count it now.
But
that's for a mortgage. Now, car loans aren't always the same. So before I did mortgages, I did car loans. I was a finance director in the automotive industry. And so that's the thing that a lot of people don't understand is that you've got mortgage credit, you've got auto credit, you've got installment debt, you've got credit card debt, which is called revolving debt.
Yeah, revolving.
Yeah. And then there's multiple things that are bad. You've got charge-offs and collections and judgments and all of those things.
Late payments
and all of the things that add up.
So if you're a student and you are trying to get a home, what is your best advice that you could give them if they have a massive student loan payment? What is your best advice?
Is get on an income-based repayment plan. That's what I tell everybody.
You guys heard it. Our mortgage extraordinaire here.
Yes.
So you have three different, you have Equifax, TransUnion, and
Experian.
Experian. And so different companies will pull different credit reports, right?
Right. So you've got a Vantage report. It's what revolving companies use. It's if you ever pull Credit Karma, that's a Vantage report. And then you've got a mortgage report and an auto report.
Yeah.
So there's all kinds of different reports that people pull in the industry. So when you go to shop for a car, they're going to pull an auto, which it weighs heavier on how you pay your auto debt.
Okay. So I want you to tell me this because I'm about to be in the market for buying a new car because my son just turned 16. So tell me this, because the last time I bought a car, probably 2017. And so they told me at that point that while I was shopping for a new car, what they were doing when I was trying to see about getting a new one or the loan, that it doesn't really affect your credit. Is that true or not?
Fair Isaac only protects you. The consumer can shop within 30-day window for the best rate.
Okay. The expert over here.
So you are allowed to shop for the most competitive rates available within a certain period.
So what was your highest and lowest score?
Oh, gosh.
Yeah. I'll tell you mine.
I don't really know what it was, but I want to say it was like 550-ish something.
Yeah.
It was bad after I got out of college.
I think the same. Mine was like 520, 530. And I was looking at trying to buy a new home at one point when I was still living in Alabama. And then my score was probably like 530.
Yeah.
So, and part of that was because of the new credit. I just hadn't established a lot of it, I guess, at that point. And so they had nothing to base it off of.
Right. And that's what I tell people is you have to keep credit. So you'll see people who may have total equity positions in their house and everything's paid for, but they might not have a credit score.
Yeah.
In fact, I just had a client a couple weeks ago that literally had 20% to put down, and he was buying a $400,000 house. Everything he had was paid off, but he didn't have a credit score. And so I had to do what we call non-traditional credit, where we build you credit. And because of that, he had to have a little bit higher rate because he didn't have a score.
How often do you actually see somebody that has the 20% down that isn't going to get hit with the private mortgage loan or the private mortgage insurance? But how often do you see that as a mortgage loan? Or
where people don't put 20% down? Most people don't put 20% down. Most people don't have 20% down to put. So they do loans like FHA loans, which allow you to put 3.5% down, or down payment assistance loans.
Or USDA, which is
or
zero,
USDO,
right?
But with USDA, you do have income limits. So, and it does require much lower debt to income ratio.
And it has to be certain locations, right? It has to be like
certain
rural
locations
or something zoned for that. Okay. So what's your highest score that you've had?
It's probably 770, 780,
I think mine was
something like that.
At 800, and that was when
I've never gotten to 800 ever.
Really? I've never owned a home too, so I don't know.
No, because I like debt too much.
No, I do too, though, so I'm not saying anything.
No,
So, okay, so the biggest thing, and if you're going to have credit cards,
you got to
keep less than 20, is it 20%?
33% utilization. So you want to be under, and I just say 30%. So if you have $1,000 limit, you want to keep the payment at $300 or less.
You want the balance to be $300
And
or
here's
less.
the other thing, because people will be like, oh, I paid that off. Well, credit cards only report once a month. So just because you paid it off when your cycle was due doesn't mean that that's going to be the amount that's reflected on your credit report, because it's always reflected the same day that it reports.
Yeah.
And so if your balance on that specific day is $500,
Yeah.
even though you made your payment, paid it down to a $10 balance or a $0 balance, it might not reflect that.
Another thing, I know some people, they'll pay something off, right? They pay it completely off, and then they think, let me go close that card so I don't use it again.
No.
That actually hurts you. It hurts your available credit. Also, your length of your history. Your time that you've had the account.
The longer your history, the better.
Yeah.
Yes. And so you want to make sure that your credit history is long, and you want to make sure that it has a good credit mix. So that means not just a bunch of credit cards. You want it to have installment debts. You want it to have a mortgage. You want it to have an auto, revolving debt. Those are the things. And then how long your credit has been, and then also your payment history. Yeah.
Yeah. Maybe we should just go out of the country where they don't have a credit ratio.
Well, and that's the thing, actually. So even if you've been in another country, I just imported somebody from China.
Shut up.
Yeah.
No way.
Yeah.
I didn't even know they had a complete system.
Every country does.
I did
Lots
hear
of country.
though that I was looking up like where they were not just basing it off of your financial, but like how did you do your business practices? Like
Well,
that
and
was
that's
their
how
credit
when
score.
I started in the business, it was much more lenient. But after the crash, then now we're more stringent. So used to it wasn't just about credit scores; it was about the collateral and your credit.
But guys, some places don't have a 3-digit credit score. So if you need to move to Europe, start all over.
Don't listen to her. Don't listen to her.
That's where I'm going.
No, don't listen to her.
For a little bit.
So you have 3 bureaus. You have Equifax, TransUnion, and Experian.
Right. And you get one free one every year. Is it free credit report?
But you can also do Credit Karma is free too.
Okay.
My favorite.
I've always used free credit report. I think at freecreditscore.com.
Yeah, freecreditreport.com.
Freecreditreport.com. And you get one free one a year.
But now they actually, as of last month, just passed where we can now do Vantage reports in the mortgage business. One of my clients actually had a 55-point improvement in their credit score because Vantage reports are more heavily weighted towards credit cards. Because think of it, more people have credit cards. So you only have usually one home loan, one or two auto loans, but usually more credit cards.
So what exactly is a Vantage?
A Vantage report is more heavily weighted based on revolving debt.
So if you have a lot of credit cards and a lot of revolving debt, probably not the best. Right?
Credit card debt is the number one indicator on whether you're going to file bankruptcy or not.
I can see that.
Yeah. And so like ranges for your credit, right? So everybody wonders like, what is a good credit score?
Yeah.
Right. So what do you think is a good credit score?
I think over like 750, 770 is an excellent probably. That's what I'm saying. Like at one point I had mine like over the 800 mark.
So actually 780 is excellent.
There you go. Okay.
And then 720 to 780 is very good. And then you've got 780 to 719 is your good. We'll put this on our website too, guys, because this is a lot of numbers. Yeah. And then your fair is 620 to 679. So that's actually where most people fall in the fair to good. The 620 to 719 is usually where most people fall.
Right. And so obviously the better your credit is, the better rates you get, the better interest rates and stuff like that. So it affects your opportunities in that case. So yeah.
So
what do you think?
What do you think you do if you do have a missed payment? How do you fix it?
Oh, well, obviously, if you're longer than 30 days, that's when it hits your report. Right? So then it's going to be reported and then it's stuck with you for 7 years. You're done.
Look, it's almost as long as some of our relationships.
Right?
It's longer than mine. Yeah, see, they just don't go away.
No, constantly following you.
No, so there's nothing you can do for a late payment. A late payment is a late payment. And so, unfortunately, there's nothing that you can do. But now collections, a lot of times,
that's even worse?
Well, here's the thing. If a collection is not a year old, then it's okay to pay it off. But if you pay off something that's over a year old, did you actually know that it can hurt your credit worse?
I have heard that actually, that it's actually worse to do that.
Because what happens is when you pay it off, then it re-hits your credit report and then it goes on there again as a paid
another 7 years,
but
right?
then
it restarts the clock.
Yeah.
So it's going to be on there even longer. So you might as well just not pay it.
Well,
no, I'm kidding.
Not always the case, but you want to ask them, will you delete? If I pay this off, will you delete? So
you want to get that in writing too?
You don't get it. You just have to ask them, do you delete? They have to tell you it's all recorded.
Okay.
So just ask them, if I pay this collection off, do you delete?
Yeah. Mm-hmm. And if they say yes, you should be good.
Yeah.
Right?
And then never, ever, ever pay a collection without asking them to settle, because at this point it's already on your credit. So if you're going to pay it,
so try to negotiate
a settlement.
Okay.
Always.
So what do you think also about the credit like negotiations?
No,
consolidation.
Never, ever do a debt consolidation. It's the same thing as a bankruptcy on your credit. I look at that the same way as I look at a bankruptcy.
Yeah, I had a friend that did that, and she was like, "That was the worst thing that I could have done."
Yeah, never ever.
Worst thing. She's like, I think she felt like she was lied to too on some of the
stuff.
Yeah,
I just helped a client last month, and their credit was tanked because the way that a debt collection company works,
they tell you not to pay stuff
because the creditors won't negotiate lower balances until you're delinquent. So what happens is that now your good payment history
is screwed. Yeah,
you are better off to file for bankruptcy than you are to do a debt collection.
That is crazy.
You can be in a chapter 13. A chapter 13 is where you repay.
Yeah.
Versus a chapter 7 is where you just wipe it all off. But a 13, I can do a loan while you're in a 13.
So what about 7?
A 7, I have to wait 2 years. 2
Really?
years from the
Okay.
date that it's discharged.
What about, is there 11? Is that
That's a business. A business
okay?
files chapter 11.
Okay.
Yeah.
So if you have a business, you can do an 11 maybe. And
But so don't ever do a debt consolidation ever, ever, ever,
yeah, I will
ever.
say my friend was like, I was lied to on
Yeah,
that
they
it
are.
was awful.
Yeah.
So, and that it screwed her up worse than even before. So it's almost like you're better trying to negotiate yourself
And
with the
most
cards.
credit cards will do a
Negotiation. Or if you want to try to lower some of the stuff, which is
Mhm.
better to do that, obviously, than to try to have it negotiated by a debt
plan.
consolidation. Any debt consolidation, they're
Yes,
worse.
they are. Yes, for sure. Have you ever been surprised learning your credit score versus going somewhere to buy something and they're like, "No, that's not your score"?
I will say, so now that they have some of the apps, it's not actually, it doesn't always
Yeah.
actually what your actual score is. So you want to still make sure that you're pulling your report at least once a year, and you do get one free one.
Go to Credit Karma. It is free every month.
So you
It
can pull it through
monitors
Credit
it.
Karma,
Yeah, Credit Karma is free.
but
It
will it give you
monitors you.
all three?
It won't give you all 3, but it'll give you an idea. But you can pull all 3 free once a year.
But when I pull that one, is it going to match Credit
But
Karma?
here's the thing, the free credit report they give you every year doesn't
Yeah.
come with a score. It only comes with the body of your credit. So actually my favorite tool for looking at your credit is actually myfico.com. It is $29 or $39 a month that you do pay,
Yeah.
but it monitors everything, but it has a simulation tool that follows the credit bureau's algorithm.
Yeah.
So I love that tool inside of it, but also it does give you all 3 scores. Not only does it give you all 3 scores, it also gives you the difference. It gives you the Vantage score, the mortgage score, and the auto scores. You can't get those. So yes, you can go and get your annual credit report every year.
Yeah.
But you can't ever get that's just going to everybody's going to have the same body of credit, but not everybody's going to have the same scores. This gives
Right.
you the same scoring models. If you're going to look for a car, know what you're going into, know what your scores are ahead of time. And so with that, myfico.com, even if you only do it once and then cancel it, it's a great tool.
So when you go when you go look for a new car, right, and they pull your credit, do certain companies only pull Experian? They only pull one? Do they prefer one over the other? How does that, or do they take an average off all 3? How does that work?
Well, it depends on the regions. Equifax is located in Georgia, so it's
Okay.
easier for them to collect data on us. So typically, if you're going to search for a car, then they are going to pull an Equifax, but they can pull a TransUnion as well, but they rarely ever pull Experian.
Okay.
Now, on a mortgage, we pull all 3 scores. A
Do you
mortgage
average
report.
those, or how do you do that?
We take the middle score of all 3 bureaus.
Really?
Mm-hmm.
So
if there's 2 borrowers, we take
the middle
of borrower 1, the middle of borrower 2, and then we take the lower of those 2.
Okay. So what do you like, Credit Karma better, or do you like the FICO?
Myfico.com, but you pay for it versus Credit Karma is free.
Yeah.
So if you're just monitoring it, do Credit Karma all day long.
Okay.
It's free. And then if you're looking to actually make a purchase, I would say do the myfico.com and then pull it and then cancel it after that month.
Didn't Rocket Mortgage just come out with something too? Like some kind of
financial,
what do you think about that?
Theirs is keeping up with your bills and helping you to lower bills. So it's totally different.
Okay. So it's just like money in, money out kind of thing, like budgeting this stuff.
And then the other thing too is, co-signing can actually affect your credit score. It ties up your credit. You are just as responsible as the other person.
Yeah. My grandfather, my dad's dad, always used to say, do not co-sign for anyone. He's like, he didn't care who it was. I remember my dad telling me this. He's like, your papa always said, never sign for somebody else.
So on a mortgage, if you do co-sign for your kids or someone, as long as they've made the payment for 12 months and you can show that it's come out of their bank account, I don't have to count that against you. But in car loans, it always counts against you.
So for mortgages, it might be okay as long as for 12 months, you've got 12 months of history
of the other person making the payment out of their bank account. So if you have a joint bank account, it doesn't work. But yeah.
Okay. Interesting. That's good to know. I did not know that at all.
Don't just ignore it. You can't just put your head in the sand.
No, you got to know your numbers. 100%. You've got to know your numbers.
Yes.
I do have a funny story about a credit card.
Uh-oh.
My Best Buy credit card. So at one point, I only had so much credit available, right? This is back when I lived in Alabama, so this has been years ago. And so I thought I only had like $150 to $200 left on it. And so one of my brothers, he was in between jobs. I think he had just closed like his computer store and he was looking for something new. So I let him have that Best Buy card because I was like, okay, he can't do much damage. It's $150 to $200. And I was in the middle of moving to Georgia, I think. So I let him have that card. Girl, that card was the card that kept on giving because they like more than tripled
your
available
limit.
Credit. And so he kept swiping it. So for the longest time, we kept calling it like the card that kept on giving. And so to this day, it is still attached to like his rewards program. And so he'll call me up and he'll be like, I noticed there wasn't a lot of rewards available. I was like, because I'm not freaking using it, you butthole. I was like, get it off of your account. I did confiscate my card back, but he had like ran it up like another $1,000 before I even knew that they had put more available credit on there. I was like, I didn't ask for a credit increase, but they will do that.
They will. If you're making payments and doing it.
They will do that.
Authorized users is another thing.
Yeah. So, well, he wasn't an authorized user, but he did have my cards.
So being an authorized user, if you add your kids, it can help them to build their credit. So Charlie's, I've added her to a couple of my credit cards to build her credit.
I actually did that for Bryant too, recently on one of mine as well.
But that can also hurt you too, right? So if your parent adds you and then they have a hardship and then they stop making payments, then that can hurt your credit. But the good news is about being an authorized user is that you can always have that account removed.
Okay.
And then you lose that payment history if it's negative. But if it's positive, you can always have a parent add you.
Yeah.
And if they've had that card for 15 years, all of a sudden you've got a 16-year
so we'll like backdate.
Yeah.
Okay. That's nice to know.
So just a way that you can boost your credit score. Another way to boost your credit score too is utilities. So now you can report utilities. Utilities don't automatically report on your credit report, but you can actually add your utilities now because you have to pay them monthly or else they shut off, right?
Yeah. It's a guarantee.
Yeah. So if you're making those payments every single month, that's another way to boost your credit score.
Yeah.
Is to get them to report for you.
All right, there you go.
Yeah, exactly. So would you date somebody if they had terrible credit?
Oh.
First of all, how do you even get into that conversation?
Yeah, really.
Like, how do you, like, when do you,
how long, how long does it take to
get
in that?
I don't know.
Good question. What do you guys think? I don't know. Tell us. Like, because I feel like that is a personal question, right? So do you talk about it on like,
no, I think you have to be in a committed relationship, right? Because I don't think that's like,
then it's like,
I mean, I would love to have your resume. I'd love to, like, listen, let me have your resume, your credit report, your credit report.
We're taking applications and we want resumes
and a background check. Like, let me, come on.
Jesus. But
that's what online dating felt like. Like, let me just send over my credit report.
Let's not talk about that.
Yes,
again.
I know, but that's how it felt like. Let me just send you over my financial statement.
But like, what if that's a deal breaker for someone and it's like they have ran their crap into the ground and then
yes, but that's the thing about credit. It can always be fixed. So
it can always be fixed.
It can always be fixed. It's not permanent.
You helped a couple people fix some of theirs.
Yeah. So that's the thing about credit. It shouldn't. I don't think. Do you need to know? Yes, so that you know what you're going against.
Well, yeah,
but
you need to know.
I don't think that it should be a deciding factor if that person's a good person. Like, what if they had an ex?
You can have bad credit and still be a good person, right?
But would you make that a dating decision? Oh God, she's so shallow.
I am not shallow, guys.
Yes, she's shallow.
I'm just saying standards are very important.
Okay, but a standard is if you have somebody that's getting out of a divorce situation.
I can't say anything though because my credit's been all over the place too before. So
and honestly, just because you have good credit,
not a deciding
does
factor.
Not mean that you're in a good financial position either.
It's not a deciding factor for real. It's not a deciding
you can have
factor.
A good credit score.
It does affect the opportunities though that are available to you. I will say that. So how does that work though when people get because we've never been married. So how does that work when you do get married?
Well, here's the thing:
if your credit is great and his is like tanked, or vice versa, if your credit is tanked and his is wonderful, how does that work?
Well, first of all, you can still have good credit and still be maxed out on everything.
Well, yeah, we know that.
So the thing of it is just because you have a good credit score doesn't mean that one person is in a better financial position than the other.
And
because if you have $80,000 of debt And
Yeah.
this person over here has you've got a 760, but they've got a 680 because they don't have as much of a credit history.
As long of a credit history. That's
right.
True.
And they don't have any debt and you're maxed out.
Some of the credit scores are it's kind of crap almost. Yeah. Honestly, it really is. I look at like payment history, like can you pay your bills and stuff.
I see it every day and I deal with it every day. So I see bad things happen to good people. People lose their jobs. They get divorced. Life happens.
Yeah, life happens.
Yeah, life happens. I mean, I remember when I left the car business and got into the mortgage business, it took me 2 months to be able to get licensed again.
Yeah.
So some of my stuff had gotten behind back then too.
Going back to like some of the financial books that I was reading, it also talked about like wealth is what you don't see, which is one of the hardest things trying to learn from people on how do they replicate something. If you see somebody with a $150,000 car, right? They have a Ferrari or they have this. That doesn't mean that they're wealthy. It means that they're either $150,000 in debt or they're $150,000 less wealthy.
Yeah.
Right? Wealth is literally what you don't see.
Right.
So just because you may not have the best credit score doesn't mean that you don't have money or you're not financially stable.
Yeah. And I have a lot of people who are cash poor and asset rich.
Yeah.
So it just depends. As far as like the question you asked about dating and marrying somebody and blending and all of that, I think you just have to have honest conversations and what you're going to build to. Maybe not what you're at now, but what you build to.
Right.
And I think that is what you have to do. So Amber, I have some questions to ask.
Ooh, is this Snatched or Sketch?
It is Snatched or Sketch.
I love this segment.
Okay, so you keep a 15-year-old card open even though you rarely use it.
That is snatched up because you should not close something out because it can actually hurt your credit score if you close it. So I would say the available credit is better than going ahead and closing it out.
That's correct. Yeah. That's snatched up. However, I will say this. If you do not use the card, the creditors
sometimes
will close the card.
I've had a couple of those do that to me too.
Use the card. If it's an older card that you've had for a long time, put a tank of gas on it, pay it off. But
use those credits, guys.
You use them, but pay them off.
Yeah, pay them off. As Jen says, our mortgage extraordinaire.
You miss a payment because you forgot it was due.
I mean, I think a lot of people have done that, but honestly, like I have so much coming in and out. I automate everything.
Me too.
So automate everything. So I don't want to say snatch or sketch on that because it can happen. Like you can forget about something and just try to automate everything as much as you can. That's what I do. And then it works out for me that way. Because I could not remember to submit payments like on the regular. I just wouldn't. I would forget to. So.
You co-sign for a car loan for a boyfriend you've dated for 6 months.
Oh, that is sketched out. He better be buying me a car.
Good God.
I'm not co-signing for no man. Anyway.
If anybody wants to take care of Amber, just go ahead and write us at snatcheduppodcast@gmail.com.
Because Jen says I want to be a 50s housewife, but I don't. I enjoy my independence too. Shut up.
She wants to keep her money and yours too.
Yes, I will do that if you are so willing to do it.
All right, next question. You buy concert tickets on a card, but you're going to pay it off next month.
Snatched up. I mean, live your life. I mean, obviously, if you can't really afford it and you can't afford the payment, don't do it because you shouldn't. Like, you shouldn't be living above your means and you need to try to stay within a budget, right?
Yeah.
So if you can't afford it and you can't afford the payments, don't do it. I've been there. I've been put myself behind. It sucks. You don't want to do it. You want to get ahead. So if you can't pay cash for it, honestly, I wouldn't do it.
Yeah. But we want to hear from you. We want to know what is the biggest credit lesson that you learned the hard way.
And tell us, would you date someone with terrible credit? You can DM us on Instagram or TikTok at Snatched Up Podcast.
Or email us at snatcheduppodcast@gmail.com.
We want to know if your credit score could talk.
What would it say about you?
What would it say about you? Because mine would probably say, I've seen some things. And maybe we're in therapy. What would yours say?
Oh, gosh. Bala. Shot collar.
50-inch blades. So tell us, what would your credit score say about you if it could?
Right.
If the walls could talk. All right, guys. So credit is not about being rich. It's about being responsible when you do borrow.
And if you've messed up, it's okay. It can always be fixed. Your score is not your worth.
But it can affect your opportunities.
So we need to stop being scared of it. Face it. If you need help fixing it, feel free to reach out.
Right. Get in charge of it. For sure.
And until then, let's get snatched up.